Good morning, this is the latest market news. I'm Uliana. Asian markets were mixed on Friday, with Japan weighed by a sharp fall in fast retailing coal and the end of the week marked by strong gains in both Australia and China. The Nikkei managed again despite the stronger local currency, last up 0.3%. Australia looks set to be the best performer of the week, with the ASX 200 up 2.9% week to date, helped by another 0.3% rise on Friday. The market continued to rise on the back of comments made by US Federal Reserve Chairman Ben Bernanke on Wednesday, who indicated that the central bank's easy monetary policy will remain in place for the time being. Just behind Australia in the weekly ranking were Chinese stocks, with the Shanghai Composite up 2.8% week to date, and Hong Kong Hang Seng Index, which rose 3.5% since last Friday. Maintaining its clear focus on the world's largest economy overnight, the S&P 500 index surged to its highest ever closing level, despite Ben Bernanke's comments, which reiterated the need for policymakers to continue with stimulus for the foreseeable future. Earmarking a very subtle shift in his rhetoric, Bernanke's comments have now made it crystal clear that bond tapering as early as September is far from a done deal, with policymakers poised to instead keep an eye on labor market figures before making a move. In line with the disappointing rise in weekly jobless claims overnight, investors have sold the greenback, taking the dollar index to its lowest level since June 25. The US dollar weakened 0.7% against the yen overnight and stabilized on Friday, recently at 99.05 yens compared with 98.96 late Thursday in New York. Today's data from Europe is mostly old news, but the US data, especially the first July sentiment reading, will provide further clues on the near-term growth potential. US June Producer Price Index 12:30 GMT. With the Federal Reserve trying to confuse all the commentators, the best bet for us is to watch the numbers that the Fed is looking at. The headline PPI is expected to have risen by 0.5% in June, the same as in May. Annually, this would mean a rise of 2.1% versus 1.4% in May. The core PPI, which excludes more volatile items, is expected to have risen by 0.1% month-over-month and 1.6% year-over-year. In June, the core PPI showed a 1.7% rise, so today's release should confirm that inflation is clearly lower than the Federal Reserve's target of 2%. It was the latest market news provided by ICO FX. Goodbye.